Thank you for joining us. I'm just watching as people join the session. We've got record numbers today, which is fantastic to see. So I'll give people just a couple of more minutes just to get them dialed in before we begin what is going to be an absolutely fantastic discussion around open banking. Nice to see some familiar faces join us. Vincent, welcome. Thanks for jumping in. Vanessa, Mr. Packar, Mr. Brown, no relation. Great to see Chris there from Xero. We've got Mr. Bell, Michelle, lots of familiar faces around the ecosystem and around the block. So thanks for taking the time out of your busy schedules. I know it's been a somewhat interesting year for various reasons, but equally I think we are going to hear for some fantastic speakers today around a subject matter which I think to most of us is quite dear to our hearts, and one that probably needs a little bit more discussion based on what we're seeing in other parts of the world. But I won't speak too much about that. I will let the experts discuss and talk and present. So just bear with us, if you may, just for one more moment, just as the numbers start to climb. Thank you for your patience. So I think we'll get started. So as I said, thanks for joining us today on what is another webinar in our series. We've had a number of them during various stages of lockdown, but today we're going to be talking about open banking lessons from near and from far. With us, we've got Amazon Web Services, we've got Xero, ākahu, TrueLayer, Australian Fintech and Basiq. So open banking, as we know, is gaining traction around the world and is now moving up the agenda of Kiwi, let's say banks and fintechs, but I would actually extend that a little bit to the financial services ecosystem, because we're all going to be impacted in one shape or form. So it does mean that there's opportunities to learn from other jurisdictions around the world, with the likes of the UK and most recently Australia going live in July of this year. But before I hand over to David, what I'd like to just give you an update on is where we are as an organisation on open banking. So we've been commissioned by MB, and most of you would have seen, if not necessarily just taken part in the CDR submissions, which closed a few weeks ago, and they did receive quite a number of applications. So let's see how that all pans out. And we've also been commissioned by the Digital Council. Now, the piece of work is not just going to be a piece of research. We'll create a nice report and then it'll sit on a shelf. Indeed not. The scope of this work will actually take on many different flavors. We will be looking at financial inclusion. We'll look at how it may address financial and digital literacy. What could it mean to help stand up our digital capabilities? We'll be asking different communities, so from our Maori and Pacifica communities, through to our senior aging wealthy community, as well as everybody else in between. But one of the key things from our point of view is that financial inclusion, making sure that everyday Kiwis are actually considered in the proposal and in the project, and what it may look like from the end user's perspective. So watch this space. We'll be making some announcements, but equally, if it is something that you want to be involved in, then please feel free to reach out to me directly. So sit back, enjoy the session. I know you're going to love it. We've got some great speakers. In order to introduce them, I will now hand over to David, who will actually get the session up and running. Many thanks.
Thank you very much for that, James, and thank you to Fintech New Zealand for hosting us. We really appreciate your support on this. So by way of introduction, my name is David Engel. I'm the Fintech Business Development Manager for Australia and New Zealand for AWS. So my role focuses on accelerating the growth of fintechs in Australia and New Zealand and on the fintech ecosystem. Unsurprisingly, open banking we view is core to that growth and to the acceleration of the fintech ecosystem and the financial services ecosystem overall. So AWS's involvement in this is really around bringing the best of breed technology partners and system integrators to help our customers and the fintech ecosystem accelerate their build to becoming open banking ready. And this is both on the bank side and on the data recipient side. And then the other part of that is then bringing really the best brains in open banking to bear so that we can help our customers and the ecosystem in general understand what's happening, the do's, don'ts, best practices, and lessons learned from the other geographies as well, given that open banking has already launched in a range of other geographies. What we are going to do today is, I'll introduce the panelists in a moment. We're then going to spend about 30 minutes. So the aim will be from 11:50, sorry, I'm giving you Melbourne times, from 1/4 to 1/4, so 30 minutes on panelist Q&A, and then we'll leave 15 minutes at the end for audience Q&A as well. So if I can please get the panelists to turn their cameras on. We will go through the introductions. We're going to do this in alphabetical order to make this easiest. So if we can please start with Damir, then we'll go to Dimitri, Josh, and Marie.
Hey guys, my name is Damir. I'm the CEO and founder of Basiq. Basiq is Australia's premier open banking platform. We service over 100 or so fintechs, and we work with a range of fintechs from different industry segments, anywhere from payments, investments, roundups, wealth, lending, you name it. And we also work with a number of banks as well. As a company, our investors include Salesforce, NAB, Westpac, and a few others as well that we will be announcing shortly. So looking forward to answering some of your questions and having a very verbose discussion.
Hello everyone, my name's Dimitri Steliunides. I am the Global General Manager for Bank Feeds at Xero. So Xero is a cloud-based accounting software platform, and our customer base is primarily small businesses. We have almost 2.5 million subscribers globally, and we have over 800 third-party apps using our ecosystem, and 200 plus connections to banks and other financial partners. So yeah, thank you very much for the invitation. It's a pleasure to be here. Looking forward to the session, and hopefully we will take a lot out of it.
Hi everyone, Josh Daniel, CEO of ākahu. We're a consumer data sharing platform that is solely focused on the New Zealand market. So we do the work of connecting with banks and a whole range of other providers, and then packaging those integrations into an API for developers to integrate into their products. Looking forward to the discussion.
Great. Great. Good afternoon, everyone. My name is Marie Steinthaler. I'm with TrueLayer, which is a global open finance infrastructure company. So we play on both the data side in various different countries, normalizing data feeds from banks across markets. And we also enable payment initiation, so actual write access. We started in the UK in 2016 and are currently on an expansion train across Europe, and we've announced Australia as our first market outside of Europe to expand into, and obviously New Zealand is also in that part of the world. So it's quite interesting for us to see what's happening here and to bring our experience, both good and bad, from especially the UK environment to the region. And we work with the likes of Revolut, Free Trade, Anna Money, and a number of others that are larger, but I can't announce them because they always put strict NDAs on us.
Great, thanks very much, everyone. And this really is an impressive set of panelists, given the depth of experience across a range of different geographies. Before we start getting into open banking, we'll start with far, and then we'll move more to near. I wanted to ask Josh just to give lay of the land for open banking in New Zealand, where it is now, what the future is likely going to look like, given that government consultations are actively going on. Josh?
Sure. So in New Zealand at the moment, we don't have a specific regulatory framework that open banking operates under, but we do have a lot of examples of open banking in practice. And one of the panelists, Xero, is an example that everyone's familiar with. So small businesses can connect their bank feeds into Xero and have those transactions flow through automatically. A couple of other use cases that a lot of people are familiar with. One is poly payments. which you might see if you book a flight on Air New Zealand, or if you're applying for a home loan, a broker and advisor may give you the option to have a service retrieve a bank statement on your behalf, so that you don't have to go down and download those statements and upload them somewhere else. So open banking has been around in many ways in New Zealand, but the landscape is shifting significantly. And if we look around the world, I think most people are familiar with open banking in the UK, which has been around for almost 3 years. Closer to home in Australia, there was a regulatory regime called Consumer Data Right, which was first implemented in July this year. And then there are some good examples of non-regulated markets like the US, which still has a large amount of data portability, but no specific regulatory framework under which that data portability operates. Then there are a couple of things to mention in New Zealand. One is a bank-led process through the API Centre, where the banks have been developing a range of APIs designed for commercial use. I think it's fair to say that most people in the data recipient community have found that process to be quite slow. And in December last year, the Minister of Consumer Affairs wrote to the banks in an open letter saying, look, this progress is going too slow. Here are my expectations for how this progresses. And we're going to start doing public consultation around a potential consumer data right like Australia. So in August this year, that public consultation began, and that work is being led by MB. And those submissions were all due in October. So MB is in a process of reviewing those submissions, doing some extra research, and James alluded to the work that he and others are involved in. And we expect that consultation process to continue over the next couple of years. So where I think this is leading in New Zealand is that I think that in 2 to 3 years, we will have specific regulations under which open banking can operate. What we've seen in other countries that have rolled out these regulations like the UK and Australia is that it will take time for the rollout to happen in phases, and it will take time for those frameworks to mature to the point where operating under that specific regulatory framework is better than the traditional current methods of data access. So yeah, that's about it for the overview in New Zealand. One other thing I'll just shout out, Westpac recently announced a partnership with a Kiwi Fintech called Kogo. And Kogo is an app that requires data portability to provide their service. So in addition to those sort of OG use cases like Xero, we are seeing new stuff happen in New Zealand, and that's really cool to see.
Thank you for that overview, Josh. We're going to break this webinar into a couple portions. We want to start with compliance and regulation, which I think aligns really nicely to what Josh is talking about. The question for the panelists is that based on what we have seen in different geographies with government intervention, so very hands-off in the US, which is leading to screen scraping, more hands-on approach in Australia and the UK. If I could start with Marie, and then I'd ask Dimitri to also comment on this, and then Damir for Australia. What do you see the governments doing well, and what do you think governments could do better in the various geographies where open banking is live? Marie, we'll start with you, please.
Sure, great question. And actually, before I jump into my answer, it's interesting to see that now in the US, there is actually some movement happening from the Consumer Financial Protection Bureau around introducing potentially regulation around data sharing. But of course, they approach it with a very different market-based mindset as the US is wont to do. I think the way I would break this down is to say, based on the experience we've seen in Europe and now also in Australia, there really is and parts of Europe that were less quick on regulatory uptake, is that there's a real spectrum from very heavy interventionist to market-based like the US, and they lead to different outcomes. I think in a very market-driven approach, you get innovation around specific use cases, but you get less of a what I would call I think the nice thing about having a regulator step in and say this is something we want to have happen in our economy is that you suddenly have all sorts of companies come to the fore who'd never thought of themselves as companies that might want to use financial data, because suddenly it's something that's a buzzword and something they think about. which happens less obviously in market-driven economies. But that said, it can go too far when you have a government that tries to then also define technical standards. So the way I would break it down is to say it's kind of three aspects. One is, do you mandate it? Like, do you mandate the sharing of, starting with banking data or economy-wide data or right access, whatever functionality it is you want to drive based on whether it's a competition mandate you're trying to fulfill or some other mandate. So for instance, in APAC, a lot of the open banking related themes are much less about competition and much more about moving from cash to digital payments. So that's the mandating aspect. And I think that is something we have seen to be very powerful in Europe. Then the second one is something around centralized certification. So this idea that often banks, if you're trying to not screen scrape and you do want to actually create bilateral agreements, that's obviously in theory possible and does happen. But one of the hurdles that often exists is that a bank will look at players in the market and say, well, how do I certify these players? How do I manage the risk? And that's another place where a government or some centralized institution can take a more active role to make that smoother, is to say, okay, we're going to certify players. And that will make it easier for a bank to then accept and enter into those contracts. And then the last bit is standardizing the technology. And I think that's an area where we have seen the deeper that's embedded into the rulemaking process, the worse it is, or the slower it moves. And that's the piece where we would say that's the bit industry is really good at. Like, let industry figure that part out, but help make the process smoother by mandating the sharing and of access to infrastructure, and maybe certifying ideally in a light touch way, but then leave the standardizing to the market participants and to figure it out as you go along with a more test-driven approach.
Thanks, Marie. And Dimitri, what's your experience been with Xero's experience in the UK with open banking?
Yeah, so what we found in the UK was that we had, it took a long time to get the APIs up to a standard where you'd call them production ready, even though they were in production, right? So that was a key finding for us, and and then there was a driver around stronger customer authentication, sort of stopping screen scraping in a mad rush to get the quality right. So that was a key finding for us. So I think what that kind of comes back to, I think, is, and Marie sort of touched on it, there's a lot of dittos in that too, actually, just around what outcome are we trying to chase here. So from our perspective, it should really be about the customer outcome and making customers or consumers of services better off, right? What we're seeing in some other jurisdictions, like Canada started like this, is it's actually about banning screen scraping, and I think that's the wrong premise. That might be a byproduct of improved customer outcomes. But to get those customer outcomes, the government bodies or the regulator needs to start thinking about possible use cases that could eventuate from open banking and design a regime that sort of facilitates that. So to me, I think that's all about participation and breaking down barriers for entry and data recipients and accredited parties. It's not onerous to actually consume the data, and then small fintechs and garages can kick things off and start to learn and create value props. But a lot of good call outs from Maria around the standardization and potentially leaving that to industry. But I think that it's necessary to have some level of regulatory input around exposing those APIs, making sure that they're done in a timely fashion. And then if there is, and probably should be, around accreditation and access to those APIs, making that as lightweight as possible, and getting that balance right between sort of risk/security and uptake. I think that's the challenge.
And Damir, you've been involved with open banking in Australia, both you and Basiq, really from the very beginning. What has your experience been in terms of engaging with regulators, what you think they've done well, where you think there are opportunities for improvement in Australia?
Yeah, great. So I think that one of the biggest kind of frustrations that that I've seen kind of with regulators take this approach is that they think that they're doing something brand new, something that hasn't been done before, which is this concept called APIs. So they try and reinvent the wheel, and then on top of that, they go to the banks and get the banks involved and say, hey, what do you think? How do you think APIs should be implemented? So you're getting, and then they ask the fintechs, and you're getting all different kinds of kind of inputs, and then And I think kind of to Marie's point is that when the government tries to make decision on technology, we kind of see that just taking a bad kind of shape, kind of a turn towards the wrong side of things. All of a sudden you've got like, they'll adopt a protocol and say, hey, we're going to use this FAPI thing, but we don't like all parts of it. We're going to use this part of it, and then we're going to overlay with OAuth. I'm going to do this, and you've got this thing, this kind of technological thing. And I think that really the government should do what it does best, and that's kind of regulate in the sense of kind of making sure that the consumer is protected, making sure that we've got good kind of privacy controls in place and mechanism, but technology-wise, let the industry solve that. And I think that that's a lesson that we're starting to see in Australia. For example, we had, I think that we've got more data holders at the moment than data recipients, accredited data recipients. We're kind of there, which is kind of a sign as well. We should have a lot more recipients than we should data holders. So more people consuming APIs rather than people exposing. And I think they're finally kind of starting to see that, this is a technological solution. This has to be developer endorsed. And I think that if I would say one of the biggest kind of criticism that I've got is consumer has definitely been put front and center, which is fantastic. But the data holders have definitely kind of had a voice within this whole regime. But the big part that's missing are the developers, the fintechs themselves that are actually going to be consuming the APIs, because without the application sitting on top of the APIs, there really isn't anything there. It's just a bunch of APIs. And I think that, as a result of not doing that, what we're in now is that you think about when you call an API, whether it's Google's API, Facebook's, Amazon's API, you go from documentation to result. With our current accreditation, you go from, I've got an idea in my head, I want to call an API, fast forward 6 months later, I can finally call it. I mean, how many APIs do you know that it takes 6 months before you can invoke an API call? So I think that that's one of the fundamental things that we need to kind of resolve, is to bring that practicality into it and say, for APIs to function, what are the best principles around APIs, and make sure that they're kind of inherent in that. And if the government can't do that, they should just kind of back up a little bit and let the industry sort it out.
Thanks for that. Picking up on a couple of different points here. So Dimitri mentioned the issues with the data integrity or the data quality out of the UK. One of the 3 points that Marie mentioned was around certification. Damir, let's stay on you. Around certification, do you think that Australia has gotten the balance right for fintechs to become accredited data recipients? And if not, what do you think should change to facilitate that accreditation or to fast track the accreditation for fintechs?
Good question. So I'll kind of rewind back. I'll tell you when the first kind of concept around CDR came about. In order to kind of verify the APIs, there was they kind of went to industry and said, hey, we're going to pick 10 guinea pigs to participate and actually call the APIs themselves. So there were 10 companies that kind of applied. 8 of them dropped out. They just dropped out. They said, like, this is too hard. This taking too long, too much of our time, things aren't ready. And what they came to a quick realization was that in order for these APIs to kind of be consumable, you need what we call an intermediary. So you need companies like Basiq, like TrueLayer, and so forth, to be that kind of that overarching kind of company that's going to take this regulatory, take this complexity, take this kind of data inconsistencies, being able to put it together and say, hey, now you finally have bank agnostic API services. And I think that that's the part that's missing. And we've realized that. So we've got in Australia at the moment, I think we're pretty close to making the final call on a new set of accreditation guidelines that's going to enable fintechs to have lightweight accreditation. It's going to enable companies like ours to participate and be able to kind of take a lot of that complexity and provide a much more simple solution. So developers can go from, hey, I've got an idea, to calling an API to result in moving on with their primary use case.
Thanks for that, Damir. Dimitri, I'll throw the question over to you. There are a number of panelists on the call from companies of the scale of Xero who would have the compliance resources and have the technology resources to pull the trigger on open banking when they want to. So what will it take for Xero to join open banking, let's say in Australia? What are you waiting to see where you would be comfortable that you're ready to become an accredited data recipient and go down that path?
Yeah, I mean, for us, I mean, just to give a little bit of context, right? So we've kind of got open banking now, right? We're connected to over 80 organisations or financial institutions within Australia and around 20 in New Zealand, right? So we get data in daily and sometimes more frequently already. So for us, participation is around customer experience not being degraded or equivalent or better, really. Do you know what I mean? That's kind of what we're looking at. And I kind of touched on it before, but for us, that can take, like from our experience in the UK, that takes time. And for us, we're in a slightly different position in Australia and New Zealand than we were in the UK, in that we actually have very good quality connections with banks currently. So for us, it's about making sure that the authentication, the consent process is great, making sure the data flows, making sure that the accuracy of that data is good, and also very importantly that the performance of those APIs is strong. That's a really critical piece for us as well. So that's the sort of stuff we'd be looking for if we were, when, not if, because we are going to participate. That's just a matter of timing for us. There's some other bits and pieces that are going through the rules now, and this is a good lesson for New Zealand around, to my point earlier, around thinking about use cases and potentially doing rules and legislation at the same time. Demir touched on it around the use of intermediaries. Well, that should have sort of been sorted right at the beginning, not at this point in the process. So, there's some rules around access, when a small business account's going to become in scope, access for third parties, all those sort of things should really have been sorted previously, so that when the launch happened in July, it was a launch rather than the sort of tiered slow trickle. So yeah.
Thanks, Dimitri. Flipping it around, and this will be a question for Josh to start with. Let's imagine that you're starting with a clean slate, which New Zealand to an extent is. If it were up to you, Josh, how would you design the open data regime? If you want to use Marie's model of mandating sharing, certification, and technology, or if you want to use your own model, how would you advise the government to create a open data regime?
Simplest way I'd put it is that I think we should use CDR in Australia as a reference point, but right size it for New Zealand. So the critical elements that the CDR regime in New Zealand should address, first of all, specify who is a consumer that benefits from these rights. And that's to Dimitri's point about why shouldn't a small business be able to leverage their own data like an individual can. The industries that are subject to these consumer data rights should be mandated by the government. And that's a way of requiring access to data. So in Australia, banking has been the first sector, but they've already identified other sectors that will fall into this regime. Identifying what data is subject to these regulations is really important. Dimitri again referenced a slow trickle of that data coming online through those regulations in Australia, but it's important that there is good enough access so that everyone actually migrates into this formal framework rather than relying on traditional methods. So in Basiq, I think we should have a regime that is very similar to the consumer data right in Australia, but right size it for New Zealand and take the time to figure out what other sectors we want to be subject to that regime.
Thanks for that. Throw to the other panelists, what would your advice be? If you had one piece of advice for the New Zealand regulator, what would you say is the most important thing that they get right for the success of open data in New Zealand?
So can I just actually take the question I was ready to answer until you finished on open data? Because the point I was going to make is, to some extent, if, for instance, the main objective is financial inclusion, let's say it's that, or more competition in the market, I think there is a decision to make in the short to medium term for the first sort of beachhead. Do you go for breadth of data, or do you go for one sector but breadth of functionality, or depth of functionality rather? So I think the Australian approach to date in the CDR has been, let's go for breadth of data. Let's start with banking, then telco, utilities, but not actually the functionality is not that deep. So it's only read access. It covers a broader set of products than the European regulation actually, which is great, has yet to be delivered, but is a great start. But in terms of breadth of functionality, there's not that much. You can't send payments, you can't close or open accounts, you can't do additional things if you're really very focused on, let's say, enabling financial inclusion or having more developers be able to build great financial services. So that's, if you'd ended the question with open finance, that would have been my answer. But I think that's the thing to think about and get right.
Great. And so just to summarize, you would say do read and write very well in a specific industry before going across multiple industries.
Yes, I think that's where we've seen a lot of very interesting use cases come out in Europe. So that would be my lean.
Okay, Damir, what's your thoughts? What's your one piece of advice?
Yeah, I think we need to take, I think we need to kind of, I guess, typical in the actual tech world, we always put the tool first and then we start looking for the actual problems to actually solve with it. And I think that what I would kind of say is that we need to take a very practical approach. I think there should be a set of kind of key use cases that whatever this problem is that we're looking to solve should be able to satisfy. And I think we need to go with that. And it's a good kind of validation point. I think that that's something that we also kind of missed here. We're just kind of too focused on the tools, and it's quite interesting every time the government kind of has to talk about open banking, they've always got the one same use case that they always repeat, but yet there's, you know, there's 15, 20, 30, 40 different use cases where it can be applied. So I think what I would recommend is like taking a very practical approach of saying, let's pick 5 or 6 projects, kind of being able to do lending or it's kind of some kind of fintech budgeting service or whatever. And then kind of every decision that is made has to kind of make sure that, can we satisfy these use cases? Is this going to be okay? And part of that evaluation won't just be about the APIs, but as Dimitri said, one of the big things is the usability of it. Will the consumer that's interacting with this, will they get stuck? You know, will they enter some kind of joint account holder hellhole and kind of end up being in this kind of maze, or will it just flow seamlessly? Because at the end of the day, it's software development. We need to make sure that we look at what the kind of core principles of successful application is and utilization of the services, and then we can validate whatever. And then we've got a good decisioning framework. So whatever choice we make, we always kind of have like certain things that we can tick off. And I think that that'll be a much more practical and sane approach.
And Dimitri, your one piece of advice.
I'm going to give you 2, David. I can't stick to one, but mine's kind of similar to Damir's in that probably upper level, like be really clear around what outcomes you seek. And then the layer down is, you know, what are the use cases that support that outcome and design for those, but also don't be short-sighted and preclude future use cases that you may not be thinking of. So that's one. And then the other one is just around barriers to entry, because for me, success is around participation from fintechs. So make those barriers to entry, what's the right word? You know, there's a balance there between security risk and participation. Just get that balance right, so that you encourage people to use the framework.
Great, thank you, and thank you all. That was a really interesting discussion on compliance and regulation. We know that that's not all that open banking is about. Really, it's about innovation. So let's turn our attention now to innovation. What I want to understand, you know, it's very easy to boil the ocean and to think of the 50 different things that you can do with open banking. But ultimately, what we see when it goes live in markets is that there's an 80-20 split in terms of the kinds of use cases that actually get rolled out in the market. So again, if we can start in the UK context, I'll start with Marie. When open banking was launched and until now, what have you seen as the predominant use cases that use open banking data?
Yeah, absolutely. So I think the one use case that people immediately jump to, definitely in the industry, is data aggregation for the purpose of budgeting. And I think for regulators, especially when they think about consumers, they think about, oh, what if you could manage all your money in one application? So that's definitely one that's just table stakes at this point. And what we've seen in Europe is that the first adopters of the APIs were you know, smaller startups or PFM apps who were building out, who had perhaps previously used screen scraping, and then as the APIs matured and the conversion conversion rate there started to outperform and the data feeds became stable and good, they kind of switched everything over. Plus then in Europe, screen scraping sort of died by way of regulation. So that's definitely one. And now what we've seen since then is that for many of the banks, it's essentially become part of their applications from the get-go. So it's, as I said, table stakes. I think so, and that's, you know, looking at our customer base, that's definitely a personal finance management plus the B2B equivalent of, let's say, automated accounting is about 30% of our customer base, 30 to 40%. Then the next big one I would say is loan assessment and risk assessment for credit decisioning. That's also, I think, one that often comes up in government consultations when they're first thinking about this. So there's so many places where onboarding and risk decisioning can be made smoother than uploading a PDF statement or a photo of a paper statement. I think the areas we're seeing grow fastest now are combinations of use cases. So for instance, combining a personal finance management feature with the ability to make instant transactions. So rather than just telling people, oh, you're out of money in this account, enabling them to shift money between different accounts through the same application. So that's kind of the point I was making around depth of functionality. And I've got some more obscure use cases later on if there's interest in talking about those, which are kind of different and creative. And to Dimitri's point, I think it's really important. Yes, it's important to start with use cases, but it's also important to not define the whole regulatory regime around those 5 use cases you might see, because then you're just shutting off lots of room for innovation there. So that's my starting shot on use cases there.
And Marie, have you seen a change in use cases as data flows go from screen scraping to open banking?
So other than the increase of combined use cases that look at both read and write access, I think the fact that bigger players are starting to use it because they're more comfortable with it, that's kind of a big one. And there, the use cases are actually fairly diverse, starting often with aggregation and personal finance management. And now with payments, there's a lot of payment flows for higher risk transactions, higher value transactions. So that would be companies that aren't traditionally financial service companies. So for instance, online gaming or travel or other types of merchants.
And Damir, what are your customers talking to you about in terms of when they move to open banking or when they use Basiq as an intermediary, when that becomes allowed from the ACCC? How are they thinking about the kinds of use cases that they are going to want to roll out initially with open banking data?
Yeah, so just to kind of, I've got a bit of a different kind of lens on this. So open banking and screen scraping doesn't mean much for our customers, the ones that rely on the actual data. What they want is the data itself. So, and what they want is a reliable way to be able to access the actual data. So that doesn't impact the use cases as per se, but something that we've seen in terms of, I guess, evolution in general is that every customer is at a different kind of what we call a data maturity spectrum. So the ones that will first kind of use the service, they'll do something really simple, like bring things together and you can see all your finances in one place. And everybody kind of starts off there, but what we see over time is that customers mature with the data itself. What that means is they start to increasingly see more and more value in it, because if you think about it, it's with for majority of transactions being online, as in like digital transactions, not kind of cash based, every single transaction that we make leaves some kind of trail or says something about us. What do we do today? Who do we like to shop with? Which institutions or brands do we prefer, and so forth. So it's incredibly rich set of data itself. And what we see in terms of the maturity curve over time is that the customers that engage and start to use the data, really what their heading is towards is leveraging that data for kind of hyper-personal, personalized services, where because I'm, as a business, I'm on one end and you're on the other end, and between us we've got a screen and software that kind of runs in that. The way we're going to communicate is by, you're going to share your data with me, I'm going to crunch that data, I'm going to understand what's important to you, and then I'm going to deliver those added value services based on that. So I think and we start to see more and more of these kind of services occur, where it's not just a one size fits all, but it's like hey, David, we know you like to shop at X, Y, and Z, so here's a reward. Or if we can get you to switch, we'll do some kind of cashback reward because we've done a deal with someone. Or we recently launched a local service called Upstreet. It's a fintech that leverages the technology, and what they do is that whichever retailer you shop with, you automatically invest in their shares. So if you shop at your local Woolworths store, they'll round up loose change and invest in shares. So it's just really interesting kind of use case and delivery mechanism and sophistication of what we're seeing in the market.
And Dimitri, have you seen much change in functionality or customer experience as you've moved from bank feeds to open banking APIs in the UK? Or is it, to Damir's point, it's just data, and where you get it from is less of concern than the quality of it?
Well, they're kind of connected, right? So I guess there's two kind of major shifts that we've seen, and they've taken time, but they're there. One is the origination process. So the use of OAuth means that you can get that data set up, that feed set up like immediately, which is great. It also, from a security perspective, eliminates credential sharing, which is a big plus. And then the other thing would be, and this is probably less relevant to the direct feeds we had in the UK, but more relevant to the screen scraped feeds, is just that quality of data is improved and the reliability of that service is also increased. So it is much better for those reasons.
And Josh, you are kind of really one of the original open banking B2B services in New Zealand. What do you see? It's probably still a few years away, but what do you see as the predominant use cases in New Zealand, or what do you see your customers being interested in using that data for?
The team have had knocks at the door over the last few years because we've been sitting on this technology before deciding to bring it to market this year for third parties. And we've seen the interest and the pressure build up for this kind of connectivity. And my view is that in New Zealand, it will sort of happen gradually, then suddenly. And I think there'll be a lot of new use cases unleashed over the next 5 years. To date, what we're seeing is kind of similar to a point Damir made, which is that a lot of organizations want to start with a simple single use case. And for ākahu, often that is related to identity or compliance. So for example, a KiwiSaver provider is currently implementing ākahu in order to allow a consumer to verify their bank account number and verify that they're a holder of that account before this KiwiSaver provider processes a withdrawal. So the alternative that would be replacing is that customer going to their bank, getting a bank deposit slip and sending it to the KiwiSaver provider to verify those two data points. So we're seeing a lot of interest in those simple compliance use cases, with a view that over time, once this organization is comfortable with data portability, they'll implement it into their onboarding, they'll implement aggregation into their apps. There'll be other services that they layer on because of that data portability.
And staying with you, Josh, the New Zealand government has made financial inclusion a very explicit priority for them. How do you see open banking impacting their ability to deliver on that priority?
I think a simple example is that fees disproportionately affect poorer people. And it should be a pretty simple thing if you've got your accounts connected up to avoid dishonor fees, to avoid overdraft fees. As long as the rules are set up and the control sits with the consumer, then payments shouldn't be initiated if there is an insufficient balance. So I think that's like an obvious use case that should get solved pretty quickly for any merchants that decide to adopt that. One that I'm really passionate about is wealth management for the mass market. I think there are good quality services for wealthy people around the world, but good quality wealth management advice hasn't really flown through to the mass market in New Zealand. And I think that bank connectivity can really help with that. For example, you can streamline the onboarding process by connecting your accounts and making it simple to onboard a customer. You can make the fact find process really efficient because you see the income, you see the expenses, So you don't have this big cliff of people falling off as soon as you say, cool, step one, prepare a budget. That can be done automatically. You have ongoing visibility of your client. So you can automate alerts if something changes in that client's life that should prompt another discussion with an advisor. And I think that trend of ongoing suitability of financial products over the lifetime of the customer is something that's done really poorly around the world, but there's going to be more and more regulatory and customer pressure to have providers actually look out for their interests over the lifetime of being a customer of that provider. So, wealth management or general financial literacy for the mass market is something that I'm really passionate about, and I think it will help balance the tables a little bit.
Thanks, Josh, and that's really well articulated. Just a quick note to the audience. We are at 1:45. I see one question in the Q&A so far, although I see one question in the chat. If you have other questions, please pop them in. I can talk about CDR for days. So I've got plenty to go, but I really want to make sure that we are getting anything that the audience wants to know in terms of questions that they have. Just continuing on from the financial inclusion question, Marie, what are you seeing in the UK in terms of how open banking is helping to accelerate, products or, priorities around financial inclusion?
In the UK, a lot of what Josh has just talked through is starting to play out. Among our customers, we definitely have a number of them who are, for instance, niche-focused financial service providers that focus on, one segment, for example, are obviously low earners who are making their first forays into digital banking with a less daunting experience than the full-blown traditional bank experience. There are some players like there's one called Kogo that focuses on what they do is if you're a vulnerable customer or you're someone who perhaps currently isn't doing too well with managing your finances, you can nominate a sort of almost like a guardian, but without actually giving them legal right of attorney over your decisions, and link up your account with this application, which will highlight certain triggers to this trusted friend so that it can prompt a conversation, which is a much gentler way of helping people who struggle with, for instance, mental illness, which can impact your financial life very severely. So those are some interesting use cases. And then, of course, in terms of onboarding and then easier onboarding, it helps. The other thing we've seen is if you're new to a country, for instance, and you're a thin file customer who with the local credit bureau isn't really registered or showing up, providing a more international credit report so that if you actually have credit in another country, you can take that with you into the UK. That's the sort of innovation that's happening right now, and we expect that to continue. So pretty exciting ideas out there, and getting really good customer take up as well. And the other thing is that I think regulators are, to Josh's point, absolutely, they are. The FCA constantly is looking at how to make things better for vulnerable customers, and sometimes in the past the remediations they've put in place are so stringent that it makes it harder to provide a good service to the 95% of people who aren't vulnerable. So I think there's an opportunity here to create something that's really bespoke for vulnerable customers without damaging the experience for everyone else as well.
Thanks for that. A question that has just come in from Kendall Flutie that is a corollary of this. It's a really interesting question. If I can summarize it, it's around how well are fintechs actually set up or focusing on underrepresented populations. We know that people solve for problems that they understand and people that they know, which doesn't necessarily help to accelerate the growth of fintechs from underrepresented groups. Marie, are you seeing anything in the UK from underrepresented groups? You mentioned the immigrant community as one, but what are you seeing actually coming from those communities to solve those communities' problems around financial inclusion?
Yeah, I think that's a really great point from Kendall. I think the existing financial institutions, if you're from an underrepresented group or in a marginalized group, you're much less likely to be working in a place like that or to succeed at a place that's more traditional. So I think that fintechs or innovators generally are just quite well placed to make that happen, which to Damir's point earlier relies on enabling participation in a much easier way so that we can open up finance for those groups to build things. Then the question is, how do they get funding? How do they get by? One interesting example of that, in addition to a bunch of social impact funds that are active in the UK, is, for instance, the so-called Nesta Open Up Challenge. So Nesta is a sort of semi-governmental agency in the UK that have been, they have a pot of prize money that they give out every year for innovation related to open banking. It started a few years ago when open banking was started to get going. So ākahu, for instance, is an example of a company where the founder has talked about struggling with mental illness and how that impacted her money life, and she got a prize from Nesta and was able to use that to set up that business. So that's an example where I think government or semi-governmental organizations can make a difference in providing funding, and then industry and light touch regulation can provide the access to actually build the products.
And Josh, what are you seeing in New Zealand, whether it's from Māori fintechs or businesses or other groups?
There are some fintechs that are focused on specific communities that have specific needs, and that's awesome. But I think it shouldn't just be fintechs that take on this challenge. I think a lot of Kiwis on this call will remember a situation a number of years back, probably a decade ago now, where one of the power companies shut off power to a consumer, and that consumer relied on medical equipment that used that power, and there was a death as a result. And so energy is an example of an industry where they are very sensitive to looking after vulnerable consumers. And this is a type of technology that can be used to help avoid those situations. So if you were offering different payment opportunities and you gave consumers the ability to pay as they go, or pay when their income arrives, or avoid overdraft and dishonor fees by only initiating a payment when there is a sufficient balance there, and having follow-up protocols that are appropriate to the consumer if a payment can't go through. So I would just say that in terms of the vulnerable communities or specific communities, I think this is a challenge for everyone to address, and not just fintechs that are focused on a specific community. In terms of how Māori and other community values are incorporated into this framework, I know that MB have been doing some work to try and understand how that should be woven in. I don't have any specific knowledge to share on from my perspective on that.
David, I'd love to just kind of
yeah,
add,
please.
One thing to that. I think it's important to note that what we're doing with open banking is effectively taking a lot of that responsibility from the financial institutions that we have a relationship with, by the banks, and we're kind of democratizing that. So by nature and inherently, open banking and the whole kind of paradigm is about creating optionality and empowering the fintech community to be able to take niche groups and being able to deliver specific use cases for them. So I think that that's one of the things that we've seen kind of happen just through nature, through the ability to be able to acquire the data. Because if you think about what the banks have always been is that they've got this huge audience that goes from anyone who's really young, who open up their first account, to someone who's a retiree, and they've got a single interface to interacting with all of them. So just speaking the same language, we don't care about your situation, this is the data that you get. What open banking does is effectively opens it up. It opens it up programmatically, and it says, hey, now you can take this data, you can now create use cases specific to particular audience segments. So I think that by nature we're seeing that, and we see that through different kind of lending methods, different kind of payment solutions that are being implemented and all of that. And I think that inherently just happens just through the ability to be able to take that data and open it up.
And another question that relates directly to that is around pricing, or well, the question's around increased competition, but really what that comes down to is pricing. We know that the lower your balance is, that if you have an overdraft fee, it disproportionately impacts your fees. Or if you have poor credit, then you're by nature going to pay a higher interest rate. And I'll open this up to the panelists. Are you seeing a direct correlation between open banking going live and reduced pricing for financial services?
We are. I mean, you can even kind of, and I don't think it's an open banking specific question. I think it's kind of like, are we seeing that the more businesses that are launching in financial service sector, is that creating more competition? Of course it is, and and we see that quite a bit. I mean, one of the kind of interesting points in the local market that's kind of been taken up by storm is the whole buy now pay later space, where it's really put a squeeze on the actual credit cards, and makes, if credit cards didn't look bad, it makes them look even worse now. So I think that, and then that kind of has kind of put the pressure on the banks to say, well, okay, how do we restructure this? How do we kind of change this around? So they're trying to kind of, they're trying to form a response around, and they're doing that in a competitive way. So I think that and as I kind of said earlier, like the fact that we're taking this data that's been locked up and only accessible through that internet banking app now. I've got, I can go to the app store and I can look at finance in my geography, and here's 100 different ways that I can interact with my particular finance now. All of that kind of, really what's happening is that it's a whole kind of debundling of the bank. The bank's kind of going behind the scenes. The fintechs are stealing the kind of consumer facing side of things, and they're creating increased competition as a result, because as a consumer, where I've got choice, it's going to put more kind of pressure between the businesses, so they have to offer better rates, better incentive structures.
And Marie, what are you seeing as it relates to pricing in the UK market?
I think pricing is one aspect. What we've definitely seen is that there are more innovators coming to the market with, sometimes definitely much cheaper or better rates, depending on whether you're saving or borrowing or investing. But at the same time, the other big impact has been that the incumbents are stepping up their game. And I think that started with the first wave of sort of neobanks coming along, who were not necessarily open banking enabled, but now with open banking, it just blasts it even wider open. And so that combination of new players entering and existing banks upping their game as a result of that competitive pressure has led to just a decrease of it. Maybe pricing's gotten better, but also to Josh's point, for instance, reductions in overdraft fees, just the lazy fees that banks could rely on beforehand just start going away.
Thank you for that. Josh, this is a question for you. Do you think New Zealand has left it too late with respect to fostering fintech businesses as it relates to open banking, and that it leaves your locally grown businesses vulnerable to the likes of Revolut or Robinhood or other really well-established consumer-facing fintechs?
Well, this is such an interesting question, and so many factors that feed into this. So I think you could point to some regulatory settings, like we don't have a sandbox for neobanks to get started in New Zealand easily, for example. And yes, we are behind in New Zealand in a lot of these areas, and we haven't had much data portability in New Zealand, or at least an easy framework to adopt to build things earlier on than we have and are now going to have. So I think you can point to some things that have slowed us down a little, but at the end of the day, I think it's up to New Zealand entrepreneurs to get on it and go for it. Successful fintechs have been built in New Zealand, and they will continue to be built. I think buy now, pay later is a great example of that, where you can do it from here and you can go to the markets that you find more enabling earlier on in the life cycle. But yeah, I think in some of the use cases that can be commoditized, and I think PFM is one example of use cases where it's relatively easy to build more universal solutions. It is going to be harder to compete if you are just serving New Zealand and then decide you want to take on the world. In the last couple of weeks, we've seen Google announce a whole lot of products and features related to personal financial management, and obviously a huge captured audience that they have and a huge amount of money that they can put behind that. So I just think New Zealand entrepreneurs have to be smart about the use cases that they go after, and take into account what are the regulatory settings here, what are the other factors that can give us an unfair advantage. But I do think we can continue to build things that succeed on the world stage, even though we're behind in some areas if you look globally at the moment.
Thanks. So we are bang on 12 o'clock. Let me just check with the panel. Just a few more questions to get through. Give me a thumbs up if you guys are able to spend a few more minutes. I know that, yeah, we got a thumbs up. We got a thumbs up. Okay, great. We'll crack on. So a related question from Pooja is around how to get data from financial organizations. The question is, how should financial organizations get ready before contacting banks to get financial details from the banks? I'm going to put a question before that. Should financial organizations contact banks, or are they better off going through an intermediary? Josh, we'll start with you. Here's a softball for you, mate.
Well, I think 3 of the 4 on the panel are probably quite biased on this one. I mean, my view is that most third parties that connect to banks, not all, but most, will prefer to use an intermediary. And the main advantage is that one company does the job of building and maintaining all those data integrations, and then adding value on top of the raw data through enrichment and categorization and so on. And then all the third party needs to connect to is one API from that intermediary. So it's a lot easier than having a team to build and maintain and enrich all of that data coming in from all of those integrations, replicate that function in each third party. It's a little bit like AWS. They take care of undifferentiated functions that are required in all these different businesses. So yeah, I think we'll continue to see high usage of intermediaries in New Zealand. You could approach the bank and look to do a bilateral agreement, set out the commercial terms, set out the fees, set out the data access. Banks are in varying stages of readiness in terms of data exchange. Some are further ahead than others. And your other option right now is to work through intermediaries that work with unsanctioned data integrations. And then the other option is to wait until CDR or whatever regulatory framework emerges in a few years.
And I assume that there's going to be no argument from Marie or Demir on that one. No, okay, that one was easy.
I mean, the only thing I was going to say was it also depends on the actual use case. If all you need is account verification, then maybe it is just easier if you're willing to go through the pain. But the moment you want to start doing anything else, one of the things that is kind of really important to note is that the data itself between the banks, open banking or not, is inconsistent. If you want to get the data in one consistent format, you either have to build out with your own TrueLayer or your own Basiq, or you go through an intermediary.
Great. We'll end on this question. I noticed, Paul, there's a question from you, which is a fairly complex regulatory one. Happy to take that offline, or if you want to reach out to the panelists on that. But if there are fintechs on the call, if you had to give one piece of advice to a fintech that says, I am now going to build a fintech business because open banking is live, what is your piece of advice to that fintech? We'll start with you, Demir.
Don't wait, do it now. The API services are already there, whether it's screen scraping or not. Start building your business, start doing your use case. The value is not in the technology, it's in the data. And the data is available right now.
Marie?
Yeah, I think come talk to us, come talk to the people who are doing the intermediary work, and get going.
Josh?
I'd second that point, which is be aware of what is available now and what will be available in the future. And I'd add one, which is that there are a lot of lessons being learned at the app layer in the UK, Australia, US. So look at those lessons that are being learned, figure out what will translate to New Zealand, and good luck.
Thanks. And Dimitri, did you want to add anything?
Not really. I think that's a really comprehensive response from everyone, actually.
Great. Well, thank you for that. And thank you very much to all the panelists. And the other point I would make, just a shameless plug here, is that you're also going to need infrastructure to store and analyze that data. And AWS is spending a fair amount of our own time on building up the capabilities to help our customers fast track that. There are some compliance requirements around that we can help with as well. So I will hand over to James now to take us out, please.
Yeah, thanks, David. Great session, everybody. Fantastic interaction between all the speakers and the panelists, and really, really good questions coming through. And hopefully we managed to sort of get to them all. Clearly, there are things that are already in place. So to the points from the panelists, go out there and start, don't wait. But equally, there's still work to be done. And collectively, I think with the brain power on the call and in the panelists, I think we've got a great opportunity here in New Zealand to learn from countries from around the world. So with that, I'd just like to thank David for emceeing the session, for our speakers for taking the time, and for you on the call for dialing in. Thanks very much, and we'll see you on our next session. Thanks, everybody.
Thank you, James.